That's Charlie India Sandy Sandy.
Good morning and happy Friday, everybody. Happy options expiration Friday, actually. Thanks for joining me. It is the 19th of January, 2024. This is episode number 2607. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. So here we are on Friday. Quick reminder, we did the public webinar yesterday. Went a little long, an hour and 20 minutes, just covered a lot. The preparation webinar, the most important element to trading success, can be found in the link in the live chat. Go to ct.pro/preparation. Go check it out. Make sure you're doing your homework, then coming here to the Trader Bite to compare notes. Hopefully I'm coming across loud and clear. Let's take a look at what the market's got in stock. So, mild risk on this morning again. Market's got a positive tilt as it did yesterday, and the overnight session had a few pieces to it. We did get some earnings. Travelers is the biggest one. It beat by 37%, came in at $7 and a penny versus $5.09 and on 10.9 billion. It beat the revenue number by 9.4%. SLB, State Street, Fifth Third Bank, Alley Financial, as well as others reported. There's nothing expected after the close. And other than that, the Japanese CPI number came out slightly higher than expected by about 10 basis points. TSMC microchip euphoria continues into the Asian markets. This has been a driver yesterday for the NASDAQ and the microchip sector. North Korea tested a nuke underwater. BASF, which is a pretty large component of the German DAX, missed target slightly this morning. You can see the DAX is just flat. So is the Euro Stoxx 50. It's a component of both. UK retail sales missed by a lot. It's showing month on month negative 3.2% versus negative 0.5 expected. Softening news there out of the UK as well, but Japan kind of went the other way, but Japan's in a different place. Treasury seeing overall flattening, and of course it's OPEX Friday. OPEX Friday, looking at gexbot.com here. It's still, it doesn't look too bad. Not seeing the market being heavy one way or another just yet, but that'll change here shortly. As far as what's on deck for today, you know, we did get several numbers. China's FDI. We got, as I said, we got PPI out of Germany, which came in a lot weaker, very deflationary. PPI out of Germany came in at negative 1.2 versus negative 0.5 expected. We did get Lagarde speaking at 5 a.m. Eastern, and we're looking for Michigan sentiment prelim. This is a high tier number. This can be a mover today, so pay attention to that. That comes out a half hour after the open, expecting 70. With it come existing home sales, expecting 3.82 million units for December. Then we had Fed's bar at 1. We've got long-term tick flows at 1. This is basically just the flow of investment money. And we have Fed's daily at the end of the session, 15 minutes after the cash close. And that wraps up the week, and what a week it was. The ES seeing a multi-distribution profile. I'll put the chart up. Let's look at the stats first. Multi-distribution profile this morning, 226,000 contracts, which is in line. And the inventory is 94% short, heavily tilted, meaning 94% more of that 226,000 occurred above the prior day's close than below it. So there's a slight long inventory tilt here. Excuse me, would expect a quick adjustment at the open. And really good range, 32.75. At least we're not in the 12, 13, 15 range. So we're looking pretty good coming into the session here in terms of price discovery. I expect pretty decent opportunities this morning. Again, we've had that all week. The POC has shifted to 48.31, and I'm going to talk about what I'm going to talk about 95% short. Did I say short? It's long inventory. Sometimes my mouth gets ahead of my brain. Yeah, it's 94% long inventory coming into the session. So I talked quite a bit yesterday, and I want to cover this really quick here. Those of you who attended yesterday's public event, we went over this. We went over why homework matters, why prep matters. We went over how I'm coming up with these levels and what we discussed. Yeah, sorry about that. And what we discussed here is quite important coming into today. So yesterday we said anything between 04 and 85, this zone here, I'm keeping my hands off. This is noise. So identifying a noise zone through homework helps me stay objective when the market opens. I don't have to see a flutter on the open and immediately think the market's about to do something. I know that this zone is not a good zone to be. It's value. There's no edge in this zone, at least in the way that I look at things. And 04, 05, tick, 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 becomes the key area to test yesterday. If not, it's 85 just below. Beyond that, we have the 72 down here. Okay, and that ties in with the double TPO high of the prior session, which was at 75.76. So 72 to 76, this area here is pretty important in terms of looking for support, right? We'd want our stops well below that if we're going to get long fading the prior balance session, which is a fair trade. But what we're looking for yesterday, as outlined, is if we get above the 04, 05, what we're looking for there is it goes up to 04, 05, pulls back, pushes through the 04, 05, and now the 04, 05 becomes a base. And then let me turn down my news feed. The 04, 05 becomes a base, and that starts to launch us towards 15, 16. Right, so the 15 figure becomes important because this is the MC point of control. And if it doesn't hold the 15 and it drifts through, and this was expected earlier in the session, which didn't happen, then we're looking for how does it treat the 25, 50, 25 area. If the 25, 50 gets taken, then what did I say? We're looking for 39.75, and we're on our way to 48.50. That's what's most likely to happen, or what is probably going to happen. If it doesn't hold the 72 below, if it pushes into 72 and doesn't hold the 72 and starts to fall through, then you're looking for 66, 62, 52, 52, where the excess is for the prior session, for Wednesday's session, and now we're looking for 47.20. So those are the big trades of the day, the if-then situations that we're looking for the session, and now we're attentive to what the market does. Here's what the market did. Okay, so I'm going to go over this, especially for those of you who attended the prep session yesterday, which was at 12 o'clock my time right here. I want to talk about this to help you see the light in terms of being prepared, right? So the areas were identified, 04, 05, right there. You see that? Bleep. This, we were hoping, the ideal situation is this would occur over here, right? Giving us an opportunity to catch the run to the, what's the number we're looking for? Above the 0405? The 1516. Look at that. 1516. So we saw the structure at the end of the day. So this was expected. Push to the 0405, pull back, and then squeeze through. There's no trade there yet. Squeeze through the 0405, pull back to the 0405. That gives us a clear long, lean against the last zipper. So we're only risking about 2 points or so, looking for 15, 10 points away. And then if we can push through the 15, which we did not, if we can push through the 15, we're looking for 25.50. And if we take the 25.50, zippity zoop to 39.75, because the excess becomes canceled and a lot of folks are likely to puke up their shorts once that gets pushed. Likely, probably. Remember, nothing is definite. Don't want you to have this illusion that somehow I know what's going to happen and the market has to, needs to, must. Markets doesn't have to do bleep. It just follows a test, retest, accept, retest, accept, balance, imbalance. That's the market's job. And that's what it did. So between the 05, so our prep said between the 05 and the 85, which was right here, the 85, which had a lot of big dots in it. In the morning, it had big dots all over the place. Lots of fights here. Between these two references, there really is chop. And now we're looking, if we want to participate, now we're looking scalpy. We're looking for short-term price action. And so on. And you could see once it broke the 85, it pulled back. You had the 85 VWAP support. And that was a pretty decent trade down into our next area, which was the 72. So we had a gap to settle trade push here. And then from the settlement, we definitely found buyers. Buyers came in and it ripped right up, supported by news there, ripped right up into our 05 and so on and so forth. So you could see the goal is not to show you what I talked about in the Trader Bite and then to show you what happened here to say, look at me, I'm right. The goal is to show you how important preparation is for sifting through and filtering out the noise and helping us see what areas we're looking for, what we would anticipate the market to test, and then how to respond to those tests. And that's it. Define risk, define targets, make sure you have a good R factor, and boom, the trade goes. No attachment whatsoever in ideal circumstances. So what happened since then? The overnight session holds the 15. Okay, so we hold here. Remember, this is the MC point of control or MC high volume node, really. Once we push through the 15, we're looking for it to pull back, and the next price becomes the 25. Oh, right here, the 25.50. If it breaches the 25.50, this brings us into the excess high, pulls back, and then continues to where takes out 39.75, just as expected. So this isn't always how the ES treats its traders, but right now, because the controlling, from what I see, the controlling participants are short to intermediate term traders, there's respect for these intraday levels. But if long-term, intermediate to long-term traders are dominant, then they don't really care. They're going to run right through these levels, and you end up with stops and losses, and it's just the way the game goes. Losses are a part of the game. So we've taken out the 39.75, and we've opened the way for the mid-century retest of 48.50. That's what we've got today. So point of control shifted to 31. We have VWAP in mid beneath us. There is a, as much as the auction has been separated from its VWAP for the session, giving us an indication of lack of balance, the market is actually currently working towards balancing out. So you can see the price action is moving back to the point of control. The point of control is pretty prominent. It's a multi-distribution profile, but the point of control is pretty prominent. And you could see that the VWAP starting to work its way towards the point of control. And when those two come together, generally you have balance, right? VWAP is volume-based, volume-weighted average price, and the point of control is also volume-based, which is volume at price, direct raw volume at price. So the way this was looking, an hour ago, it looked like it was imbalanced, and we're likely to pull back on the open base out of either the 15 or the 25, and then do a day session push. We're opening in a gap this morning, so we have a gap zone beneath us. Gap rules apply. We want to see how it treats the gap. If it does not fill the gap, if it doesn't start to move towards the gap, then we eliminate the short side. Don't even bother clicking on that sell button. Eliminate the short side and only look to be neutral, sitting on your hands, or long in the situation back into the 48.50 to 52 area. That becomes the next key area to test, right? First, because we're at 27, first we look at 38.50, 39.75. Those are your last two highs, potential resistance protection there, or defense. And then from there, 48.50. We do have the additional layer of options expiration today. I don't have the options numbers yet. It looks like it doesn't look too heavy to me in terms of offsides auctions. But all of that will update during the cash open. We'll start to see what the overall exposure is. But I haven't seen anything that tells me what the options exposure is this morning, or gamma exposure. But that's going to come into play today as well. But here's what we care about. What we care about is it's opening right here against VWAP. Does it open and push immediately, or does it open and then start to squeeze and drift towards yesterday's high right here? And if it gets to yesterday's high and the gap zone is closed, does it then drift back into the range? The close was very bullish yesterday across the board. The expectation is it's expected to hold that and start to move up and push towards the higher prices. That's what I'm expecting. That's what the market's condition is. The delta is not helping us. So let's look at delta for a moment. We don't spend very much time at delta, but look at this thing. We are skating on top of VWAP here. We keep having collisions at the highs. You see these, every time we make a high, we have collisions. So there's some hedging behavior. There's some liquidity being offered, and the market's coming in and punching against it and pulling back, and punching against it, pulling back. That's likely to continue today, given options expiration, given that we are breaking away from the most recent bounce. So we kind of expect this. But overall, large lots, which is 10 to 100 lots, are sellers. Very large lots, which is 100 lots or more, are buyers. Everywhere you see these dots, you'll see a step up in the very large lots, and small lots are kind of sitting sideways, but the aggregate demand or the aggregate aggression is negative despite the fact that we're above the VWAP. This makes things a little bit suspect, and the expectation is that 94% inventory is likely to balance out. So this is likely to pull back towards yesterday's high, and then the question is, are you going to hold that high, which isn't a very strong, very supportive high because it occurred right at the close? Does it fall back into the prior day's range? If so, it'll probably cross down below the 15, consolidate around the 15. That's your high volume node. I'll show you where that comes from. See that? This is your high volume node right here. Boop. This is the 13 to 15 area, 15 here in volume. That's the area that we're talking about here. And we're up here. We've kind of crossed. We've taken out the 39.75, taken out the top of this profile, and we've come back in. This thing may find itself sliding all the way through to the 95 if it cannot find any traction at 15, at the settlement price of 11, at 0504. Those are just areas that I need to see a reaction in. I'm not going to anticipate or guess that there's a reaction. I'm going to wait to see that there is a reaction. If not, then it's very likely to work itself down into that 97, 94 area. Okay. I went long here. I've spent a lot of time on this product. The other piece is, of course, Crude. Crude has transitioned. So I talked yesterday about Crude, and I said 74 is the next likely test for those of you who are here, or you're more than welcome to go watch the Trader Bite again. 74, we tested down below this high volume node and this double distribution. We tested below, and the day before that, it went from below to the middle. And what I said about yesterday is it's probably going to go middle to upper distribution, and it's likely to cross into the 74, and that's what we have here. So Crude's at 74.40 currently, so that's going as expected. NQ, really, NQ is doing the same thing. I might as well talk about the NQ when I'm talking about the ES. Same sort of thing, except the NQ used its MCV as support yesterday because the NQ came in quite strong and got ahead quite early. So the NQ is expected, is above the entire, even last year's high, and is in a different condition. The spread between ES and NQ is stretched out. They're not in balance with each other. So you don't want to be looking at the ES while you trade the NQ. That's not a good idea. The NQ is opening in a gap, likely to pull back a little bit before it starts to squeeze again towards the 17,500 area once again. So that's what we're looking for there in the NQ. Hopefully that covers it all. Hopefully that covers it all. It looks like the call wall major pot, it's really at 4,800 in cash. And I'm going to tell you the spread between cash and futures. The spread between cash and futures is 30 points. So 48.30 is where the beginning, or at least the beginning of the day call wall is. We'll see how that gets adjusted in the futures. 48.30, 4,800 in the cash, as expected, century figure. All right. I'll leave you with that. Good luck. Don't forget to go watch that prep video linked at the top, pinned to the top of the live chat. Hopefully you picked up a nugget or two, and hopefully you've done your homework and are comparing notes. And I hope things work out as you had planned them to. Good luck, and I'll catch you Monday. Take care. Don't forget to hit like, and if you're not a subscriber, subscribe to the channel. Take care.